Hello and welcome to the Stock Planner channel. Today we're going to look at T-Mobile, a telecommunications company, a company that many analysts feel will go up 25% this year. The stock is currently underpriced, with earnings growing over 36% this past year. T-Mobile's stock chart looks like it might go up. The Stock Planner's channel is a swing trading channel, looking for tops and bottoms and capturing the trend in between. Swing trading for me has been profitable, but trading is risky, so you must do your own due diligence. Let's get started. Most days on Discord, I post some trade ideas. One of those ideas is T-Mobile, and you can see it swings quite nicely. And right now we had a bit of a pullback, and it looks like it might swing to the upside. The MACD is indicating that we had a crossover, and that is bullish. And so is the RSI. It's pointing up. If you believe in the 50% retracement, it should go to 145, and resistance is 150. T-Mobile is a telecommunications company that offers mobile communications services and products to customers throughout the United States, Puerto Rico, and the United States Virgin Islands. The stock of T-Mobile is currently trading at a significant discount to its estimated fair value, and most analysts think it's going to go up by 24 or 25%. Strong growth predicted, with a forecast earnings growth of 17%. Wow. Earnings grew by 36% over the past year. And the snowflake, which you want it to be big and green, but you want it filled out for the future, past performance, and the health of the company, definitely. And you want it to have some value. This doesn't pay a dividend. As you can see, Verizon is big and green, which is a competitor. PE ratios compared, the current price is $143, and a calculated fair value of this stock should be around $337. Analysts are predicting that it'll go up to $179, which is a 24%, 25% increase. So the analysts, who are not perfect, think it's going to go up. 143, 50% retracement is 146, $3 rise. I believe we can get there. I have a routine that I follow when I do some analysis in order to place a trade, and then I copy that data to a spreadsheet to track it. But mainly I'm interested in my assumption. For T-Mobile, I'm saying it'll go long, and I will look at what the analysts expect, the expected move, using a tool called Option AI. A lot of this is free, and I'm going to go out about 2 months. The expected move for 1 month is 3%, and for 3 months is 4.5. So I'm going to guess that the expected move for 2 months is around 4%. And I'll annotate that in my spreadsheet. Not sure what strategy I'm going to use yet for my option strategy, but I'm going to go out 2 months to June 16th. So I'm predicting, and putting my money where my mouth is that T-Mobile will go up 4% by June 16th, my birthday. And the reason for this trade is that there was a MACD crossover. And I think it's going to go up. We haven't decided yet on what option strategy we're going to use, so this stuff is not being filled out yet. But the target and stop loss is automatically calculated on this percentage. So if it goes up 4%, my target price is going to be a 149. And if it goes down about 3%, our stop loss is going to be a 139. So the first option strategy I want to look at is an iron butterfly. And we say it's going to go around 4%. That's close enough. 149. Let's make this a 150. And we'll bring this in. So if it hits the target, there's our win line. We're doing June 16th using a tool. This is a simulation tool called Option Strat. Again, this is a free tool. You really put it in your toolbox. I use it all the time. We get a credit of $600 and a max loss of $400. And so you need $1,000 to do this trade. And you can bring these in a little bit. And this time, your max loss is 98 with a net credit. If it reaches this line, this is your win line. So $55 profit on a max loss of $100 is a real good percentage. So if this If the price gets up to 149 like you expect it to do, 4% move, by expiration you can win a lot of money. And you can win some money in this range as long as you stay between your break-even points of 145 or 146, 145 or 146, and 154. And if it goes up a little bit, these are your win rates. Compare that with another strategy, another option strategy called the broken wing strategy. This time you need $500, whereas the iron butterfly you only needed $100. But look, if it only moves a little in your way, you can take a profit early. That's why I like to use broken wing butterflies. And I can win in any condition as long as it stays above 145.51. It needs to move a little bit my way. Let's look at the graph. Currently right here, if it moves a little bit in your favor, which you think it's going to go, around 4%, 149, you can win so much more at expiration. But look, you can take profit anywhere along here. Let's adjust this down to 4%, because that's our expected move. And this is the win line. And if it goes down 3%, here is your lose line. So I'm going to choose to use a broken wing strategy for my T-Mobile play. Gives me a better chance, it's easier to manage, and a bigger payday. So if it reaches to 149, I think a expected return would be somewhere around there. We'll shoot for 189. And if it reaches 139, we have a loss of about 226, somewhere in here. And then I can copy that information over into a tracking spreadsheet. So in this trade, broken wing butterfly, we need to stay and grow. It has to go above 144, currently at 143.50 over the next 2 months. And this is the playing field. If it goes 4%, which is what I'm guessing. I analyzed it. I copied the information from the analysis spreadsheet into a tracker. And now I track where my mouth is. In other words, what I guessed or what I think the move is going to be. In this case, it's 4%. In the case of Merck on Friday was 7%, 7.2%. AIG, I thought it was going to go short by 8%. And I tracked these. Once I have a database of my guesses and the reasons why, break-evens, expected profits and losses, I can do a whole ton of things with it. These are the open trades from 4/22 to the end of this month, May. And it looks like currently I have won or winning 8 trades and losing 5. Now, why do I track my guesses? This is from the April 1st. Why do I track the guesses? And there was 23 wins and 18 losses. Because that's what I'm making decisions on. I track my trades using my broker. Those are the actual trades. These are my guesses. I'm tracking and analyzing if my guesses are okay. And the only way you can stop a trade here is if the profit target's hit, or the stop loss is hit, or the expiration date is hit. And that stops the trade. Now, there's plenty of opportunities between there to end if you're actually trading. For example, if you're nearing your stop loss and you know you have no hopes of winning, get out. Or if you're nearing your profit target and it's suddenly your stop starts dropping away from your price target, you get out. And that's reality. I'm only tracking my guesses. So in conclusion, T-Mobile is a good company. It may reverse soon and go up. According to the MACD and the RSI, things are looking bright. The analysts think this is a good company. It has a price target of 145, 140. I forgot the exact number, but this is going up. I expect it to go 145, 146. Those analysts think it's going to go up 24%. What do you think? Is T-Mobile going up or down or staying the same? Please like and subscribe. Remember to do your own due diligence. We'll catch you on the flip. Happy trading.